recording. Okay, it's Tuesday the 16th of June, and we are going to cover not only the VIX and the DXY, but we're actually just going to cover driving markets, which markets are drivers in lead lag relationships, and the difference between a lead and lag and a driving relationship is something we're also going to cover. So let's just get some really fundamental stuff out of the way here first. All right. Okay. Okay. There's a difference between lead and lag and driving. The difference is one is like walking a dog, and the other is to do with balancing. Now, in a lead lag relationship, it's similar to a man or a woman walking a dog. That's kind of a weird looking. He's walking a dog, and he's got a leash on the dog. So that's a dachshund. All right. So see this leash. This is what forms a lead lag relationship. This is what we can trade in a spread correlation. We have a lead lag. Oil is moving up, gasoline will move up. Okay, so there's a lead and lag. Brent moves up, BZ, and WTI moves up. You know, there's a lead lag between here in the spread. And that's akin to a man walking a dog. Sometimes the leash is very tight, and sometimes the leash is quite slack. Sometimes the leash is very short, but it's tight, and sometimes the leash is very slack and it's short. And you see this between commodities all the time, and you see this between stocks, equities all the time. When it comes to FX, you know, so let's kind of categorize these things here. We're looking at, commodities, equities. You see this quite a bit. Equities and more so bonds. There is there's a spread. People trade a tut spread, or they call it a 2s, 5s, 10 spread. So it's a fly spread. They'll be long 2 on the 3-year. They'll be short 1 in the 5-year, and they'll be long 2 in the 10-year. So that's being long the treasuries curve. All right, in a fully hedged position. When it comes to balancing, you're looking at FX. Does anyone know, out of the dollar index basket, what percentage of that basket? You know, the dollar index price is a derivative of, I think it's about 12 different currencies. Right? Does anyone know what percentage the euro amounts to of the entire basket?
It's the highest percentage, right? And I can't remember what it is.
It's in around 30%. It's the biggest weighted currency in that basket. So we can do better than thinking about a lead lag relationship. Dollar up, euro down. Well, in a lead lag relationship, if the dollar's up, that just would mean that the euro goes up at a slower pace. right? But it's not that. It's an inverse relationship. Dollar up, euro down. Okay? So what's happening here is a rebalancing, a balancing. So the dollar basket, if the other currencies in the dollar basket strengthen um, at a slower rate to the euro, or if there's a reason for sorry, I'll put it this another way. If there's the dollar is a risk product, right? People want to buy US dollars in times of risk because the dollar is the only singular internationally traded currency. You know, I remember years ago, I was kind of in my mid to late 20s, and I was at a dinner party with a lot of artists and stuff and architects, and these people were not really finance orientated, and I was talking about things being priced in dollars. They were talking to me about some horses, or I was talking about, I don't know what we were talking about, and I said, well, you know, that's like a certain amount of X amount of dollars, and they're like, why do you talk about everything being in dollars? Like you're really Americanized. And because I have an American accent and I've studied there and I've spent a lot of time there, they kind of like to hate on America. And I was like, well, actually, it's because the dollar is the only internationally traded currency. And they didn't have anything to say to that. And it's like, hardly anyone knows that. The dollar is the only globally traded currency and accepted by the International Banking Association, who are the absolute lender of last resort in the entire world for every government. Okay, so when the dollar weakens, can anyone tell me two things that will happen for certainty?
So the euro will go up. Euro dollar will go up,
Yeah.
and the price of oil will go up.
The oil. All right.
Yeah.
Yeah. Yeah.
Or any commodity price in dollars.
Okay. Good. Anything else? No? Nothing else?
Well, there's lots of correlations, but when you said for certainty, I don't know whether you could say for certain that equities go down. I don't
All
know.
of the euro, all of the FX pairs.
Yeah, the FX pairs would depreciate.
And all the equities priced in dollars, so the S&P should go up as well.
Right.
Anything quoted against the dollar, gold, oil, would, in theory, go down.
Exactly. What's it also telling you about risk?
If it's normally a risk off.
That'd be risk on because you've got equities going up.
If dollars up, sorry, if dollars down, it's risk off.
Not necessarily, because you've got your equities going up and everything is going up, so people are buying more.
Dollar down, risk on, sorry.
Under this circumstance, what's the VIX going to do?
Down.
Right. Yeah. So Pete had it there. You all had it. Yeah. I mean, now it's important to realize, well, in the macro sense, why is the dollar at any time high or low? Well, the dollar. Why is the dollar high now? Or has it been high?
Because there was a risk off, and
COVID.
people were going to a safe. They were going to a safe haven.
Right. Yeah. Exactly. So COVID. So also the dollar was up with that. So we can then develop a trade thesis that if we see, actually, we're going to do this now. We're going to do a little blind thesis. Let's do a scenario. DXY. This means it's flat to looking weak. Okay, if I'm looking at a dollar and a VIX chart and they're sitting on a level and I'm seeing that there isn't any major support below, what's my trade on the Euro, Dow, S&P and the Russell Index, RTY?
Long.
Okay. Long everything.
Yeah.
Yeah. So what am I going to need to see in order for this to happen? Okay, well think of it like this. If I have a if I have a chart for these two up on a 5 and a 15 minute, well, let's think of it like this. If I want to be a seller, here's a level on, say, one of these, and we've come in like this. Okay. What do I need to do to know how to get long the other products if I'm looking at break levels on the downside on DXY or VIX? Well, if you were a Tim Duggan trader, how are you going to trade this DXY or the VIX?
You need a breakout pullback. So confirm breakout, pull back to the level and coming down. So that will be confirmation of the trend.
Yeah.
And you need patience. That's what you need.
That's right.
You don't need to trade.
So yesterday on the Euro, I was just going through this morning with someone. We had a level with the Euro. Actually, it was I think it was, oh no, actually it was an older CVH. Came up like this, came down like this, and at the same time this was happening here. This, at this point in time. And I got breakout pullback long, spiked up. I didn't take any profits because I saw a huge drop zone on the DXY here, like equivalent like this size. I didn't bank off 2s or 3 to 1s. I was looking for a much bigger drive. And lo and behold, and I'll show you this on the charts, we get the pullback. Now I thought the momentum was going to come in on this breakdown, but it was very sluggish. And what happened in the market was we got this and then this. Then on the dollar we got this. A couple of hours later in the market, and I was talking to Alex and I was like, oh actually no, sorry, hold on, let me tidy up this. This is very important. Let me tidy this up on the Euro. We got something like this to here, and then let me see. Oh yeah, on the dollar index, it was doing. Oh, don't want that color. It was doing this. And I said to Alex, we were spending a lot of time at the bottom on the dollar, and I said to Alex, if this dollar index, this had happened here, this inflection point was confluent with this inflection point. And I said to Alex, I said, if we break the lows of the day on the dollar, this thing's going to scream. And he was like, he was like, yeah, let's go. And actually, he was getting into it along, and I was like, yeah, I like it. I'm getting in too. And what we got was this, and then on the dollar index, we got a break on the lows a day, and in tandem, we got this. Filled, I'm done. I wasn't even at my desk when it got filled on the profits, and this is the run we had down. Now, I'm going to show you this on my Thinkorswim charts. I need you to realize that it doesn't really matter the charting package. A 15 or a 5-minute bar is the same on every charting package. And I've yeah, let me show you this now. All right, so
so you're looking at the DXY, not the VIX, or you were looking at both?
I was looking at the dollar, the DXY, because I was taking a euro trade. So what you're looking at here is 15-minute bar chart across from left to right, the VIX, the dollar, the sorry, and this should be, sorry, we should do YM, and then we're going for, yeah, the DXY and the euro. Okay, so across the charts, they're all synchronized here, and let me kind of zoom in a little bit. 15 minutes yesterday, this all happened. These are, let's see. Let's go to the dollar trade first up, right over here, and I want to kind of yeah, the dollar trade or Tuesday. Okay, here's the dollar activity here. Okay, so you see the first breakdown. I actually got screwed up on the 5 minutes here on my initial trade. It was yeah, here from this point on. So you can see initially came down, broke, and then came back up and went bid over the level. It came, sorry, it's here. Sorry, it's here. It's here. We came down, broke the level, and let me get the equivalent. Yeah, here. Equivalent movement in the euro. These crosshairs are synced. So I want you to look at the two right hand ones. The one I'm on here is the dollar index. Now I have these significant levels drawn on from these, well, significant highs. These are months. I'm looking at daily levels of spike highs and spike lows. So I know that these are kind of major zones for the dollar index, and I urge you to do sort of at levels like this on your dollar index, knowing where we have support and resistance, major support and resistance. But let's go back to the 5-day 5 minutes and get to our major point here. And yeah, okay, you can see the initial breakdown. All right, on the right hand side, see I was long here and see it flushed up. I didn't take that and I got stopped out. Why did I get stopped out? Does anyone want to tell me why I got stopped out? Nobody? Sorry? Okay. All right. I got stopped out because it broke the level and then it flushed back up, sort of out of anger, if you like. It was about to depart on the downside. Like look at the amount of downside between support and resistance here that I have earmarked up. Look at this. Look at this drop from the 938s level. So it wasn't set to go. It wasn't set to go. It wasn't ready. It wasn't ready, right? So look at this. Dollar up, crush the euro back down. Yeah.
Yeah.
Then ages later, it can't reclaim this level. So then it starts drifting back down, and sure enough, the dollar now is set to come up. Okay, we drift on in time. Now it breaks the 938 again, and now it's just sitting here. Sitting here. And the low of day, this point here. I said if it smashes that, we're in the money. Well, I put my trade on. I had defined risk, very defined risk, very tight risk on this, and order cancels others. OCOs work in, take profits above, and look what happens in the marketplace. We come along, and at this point in time, looking at your euro chart on the right, breaking the low of the day with gusto, you can see what happens. Okay, the break actually occurred, well, in this candle. Just momentarily, this bid came in. If you were trading the dollar index, you could be getting on this breakout. Okay. Inversely, let's look at now we're going to switch our concentration to the VIX, and there will be, I'd love to take your questions after this. With the VIX, I like to have a bigger chart, like a 4 hour. Actually, yeah, I have a bigger hour, and I have a lot of drawings on this one, but let's go to a fib. This is quite clean. All right, so the fib in turquoise here is essentially what I have as the COVID breakout point here, which started just below the downtrend, major downtrend, but it started here up to the very height. And now we've drifted down to retrace about 78.6, but back to the scene of the crime here. Look, I'm going to zoom in. Look at that trend, that major trend, which I talked about in the video. And then we went supportive off it. I called that like almost 2 days before it happened. Why do you think I was able to call that? Because 2 days before it happened. Does anyone want to help me out, help you here?
Because you've done your research and you've got your trend lines and markets.
Look at this. It's come down here. You know what I like about this is that it actually didn't actually test the downtrend. When it comes really close like that and it pulls off of it, I kind of have a sneaking suspicion that when it comes back down to test it, it's going to wallop it. Anyway, that's how I'm able to forecast. Okay, if we come down to this trend again and it becomes supportive, well, that's going to kill equities. And like, sure enough, look at, like, this is the bid since it was there. Look, I mean, look at how close it came, but it didn't trade it. And sure enough, then it comes back up, finds support in the 78.6 retracement here, and this is what has caused the major volatility to the downside for the second time. And actually I have to update this here to here. So now, knowing the VIX, we are very, look at what's happening on the VIX here. So let's go to yesterday, or let's go to yesterday. Essentially Monday. Look at what's happening up here in this wedge that I've drawn here, and look, see the activity from this low to this low. Well, look at what happened when it broke there. Look at this. Came down. I was actually in Trading or Amplify Live saying I expect rotation from here back up to the 41s. We didn't get that. We got one bid, got smashed down by this retracement area, which see this 618? This is the major retracement 618 from the COVID crisis. If I do 1 year, 1 day, this is the major COVID crisis. Actually, it's not lining up perfectly there, but here's the bottom of it, and here's the top, and here's that 618. All right, So I'm seeing that the 618 of the major trend, or the major push up, is now resistance. And where would our target be? It's a 78.6%, which is down below where we're trading on the VIX. And then another unknown, little known Fibonacci level is 88.6, which is the deepest of retracement levels. Okay, so let's go back to the smaller time frames. Well, shit, here's that 78.6 way down here, $26.58 on the VIX. And look at what's happening. We've had this breakout point here on the wedge on the VIX, and then bang, 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 all the way down. All the way down. All right. Okay, quick fire round. What's the trade right now?
Long equities.
Yeah, we just missed it. I would have said equities went before the VIX, and so I was watching it, and I was thinking,
Well, look at this.
should I go long? The trade for me was go long the euro off the combined value area high.
But we could, yeah, right. Okay, so that's where you're really marrying a lot of shit up, right? So you've got this 618 on the most recent volatility bid, yeah, and you got the 618. Let's zoom in there. Let's zoom in. It's been come down to it. I don't want it to be confused here. Yeah, here. So we come down. It tries to break down, can't do it. Comes up, comes back again for a second assault, and it just gives it up big time. So where is this volatility index going today? Give me a price right now. Where's it going?
30.
29.47.
Right, exactly, Vincent. That's what our expectation is. So we look for this condition to continue. Now, does that mean that it's going to happen with no pullbacks, with no activity? Like, look at this. Imagine this was a supportive line on the way up, right? Imagine it was 29.47. Well, yeah, right. It was actually. Well, in the overall trend, it's going up. But look what happened. It goes up, deep pullback, and keeps going. That's where this is a scenario here where you'd be going, well, actually, I know the overall picture is we're going up, but I don't want to be caught with my pants down just buying it just because I see a lot of green on the VIX. You should be waiting for the reactive pullback, and you should be waiting for, okay, so drawing an example to that right now we're going to be waiting for this sucker, this VIX, to make some sort of a pullback, and I suspect it'll pull back to the 32.26 and do a jig and a poke somewhere here between here and 29.47.
Okay, will it not just go down, so a deep pull down and pull back to the previous low, which is on your left hand side?
This low.
Yeah.
Exactly. That is another area where if it goes deeper, it could pull back to there. Absolutely. But am I going to readjust my level here? No. The ultimate level that it's broken is 32.26. So I'm not going to start drawing a new line here. I'm just going to eyeball it. And then I'm going to be looking to see where I can get an imbalance pullback long on the Dow when that is occurring.
I've got pivot points on mine because I copied another graph. It just so happens it's sitting right on S1. That might be what's holding it up.
Yeah, it could be. It could be.
S2 is 29.74, which is more or less your target.
Remember this, you eat pivot point traders for breakfast.
Yeah.
I have a trainee sitting beside me who's not very happy with that statement because she's trading pivot points right now. But you guys are trading not pivot point traders anymore. You're trading auctions. You're trading value auctions. I got this 26,432 level here in the Dow. Well, let me show you my Dow chart. So I'll give you the ultimate context on this Dow market, and that's what this is. That's this. That's what we're looking at right here. I've got a Fibonacci extensions to the downside here. Let me just. So this is what the market's doing. Look at that top. Well, I've known this trend channel since top, bottom, top, since October 2018. These are monthly bars. See where the bottom of this month, or the June, April, May, April. See the bottom of April trade here? Where do I have that curve from? The all-time low in 2006 to the low of 2016.
So, I mean, right now
Look at that candle. These are how you get into the absolutely massive trades. Marrying this with value. You know, I mean, this. Sam actually bought this trade, and okay, if you don't buy the bottom, you can buy the bottom of the trend channel. Well, look at where May opened, at the very bottom of that channel, and where did this month go? The top of the channel. Now, if you think I'm on Monday morning refereeing this, I certainly know Sana and Vincent have seen this chart multiple times over the last 6 months. And I haven't changed this in a long time.
So I'm just looking at what's happening right now. If the VIX is pulling back, is that telling us that people aren't buying this sort of rally, this morning's rally on equities?
They're
not hedging it.
I really don't know if you've just been present in the last 15 minutes of what I've been talking about. What did I just talk about? So we just broke down on this level here in the VIX.
Yeah, it's pulling back. So, okay.
What happened to me in the euro yesterday?
Yeah, same again. Yeah, okay, so it's a breakout pullback. Yeah.
So describe to me, answer your own question. What is happening here in equities, Dow? What's happening, Peter?
Well, so I mean, it's a risk on, isn't it? I mean, people they're rallying, pushing to the upside. But they've led VIX in this case.
You're getting there. What's happening? Net shorts, net puts, net calls. What's happening?
We just broke the level in both. Right, so we've got breakup pullback long and then breakup pullback short. VIX is going down basically and equities are going up, but we're retracing back to the level in both charts.
So a delta positive on all three equities in there.
What did Vincent say was going to happen?
It's going to break down, pull back to level because people are taking profits and therefore and they're waiting for the pullback on the equity to get long again because they've got the confirmation of the VIX breaking down. So basically, they're being patient.
Okay, we're looking at the VIX here. So we want to time our entries here with the VIX. Now, I mean, sometimes I won't be looking heavily at the VIX like this. Sometimes I won't. I'll just be like, this is good value right now. But remember, Vincent, you said it'll try and retest that prior low.
So if it tests this one and actually breaks that level, and we can wait for the retracement to 30 to 26. If it doesn't, and we close below, we've got an indication that it will not retrace to 30 to 26, and therefore we can get back long on the S&P.
Yeah, we're kind of timing the the lead lag here, or well, sorry, not the lead lag. It's more like a balancing act. A balancing act between the options market and the front equities market. So actually, what it's funny because what the VIX is a derivative of all of the options activity, and what the Dow is the price, the actual price you're looking at is a net result of people's equity positions and rebalancing of portfolios and just people buying and selling. So the VIX is kind of like a way for you to see how is the market pricing the future here. Whereas this, this is also the same, but it's excluding the insurance, right? Oh, look at this! Look at this! There you go! Right, boom! I belong here. God, we're gonna have another push here. Wow, this is fantastic. So I haven't even been looking at the Dow on a volume chart. There you go. 2000 tick imbalance pull back long. And you've got in confluence there with the VIX. Now what are these red bars on my... Oh yeah, okay, right. So remember the trend channel I had on the Dow? Well, look, here it's split into quadrants. Here's the top, here's the bottom of the top quarter, here's the middle, here's the bottom, or the top of the bottom quarter, and here's the bottom. Now this is a pretty significant area for the Dow, right? For it to stay offered below this, do you know what I mean about the quarters?
Yeah.
So this is quite a significant area for it to get above, and I hate to say it, but actually, I think we could see another period of broken out over this trend channel high. I mean, which is just insane. But to be honest, going on historical movement, I would enjoy being a seller up here because I think that's the bigger probability trade with so much risk hanging over us. However, it all depends on the COVID picture once we get up there. If they're starting to talk about more, if risk starts to get baked in a lot more, I think this is going to be a fantastic opportunity for us to get some shorts to get into earnings season.
I'm looking. The euro hasn't, the DXY haven't popped at all.
Yeah, I think the DXY is finding support on the 582s here, and the euro is struggling with that fact.
So could it? I mean, I don't know. I'm just trying to get my head around it. But could it be that people aren't really confident in this move up in equities? In which case, the logical thing to do would be to buy puts, which would be reflected in the VIX moving up again. So the VIX hasn't gone down on that equity move. Could it be that people really are a bit worried? Oh, I'm not really believing in this. They started buying puts to give them an option to sell at those levels. That would push the VIX up. That would push the VIX up.
The VIX is not a derivative of the Dow. The VIX is a derivative of insurance taken out on the Dow.
Exactly.
It is not.
So how do you insure against?
Drive the VIX, dude.
Yeah, that's what I'm saying.
The options market drives the VIX.
But that's what I'm talking about. So the fact that the VIX isn't moving, breaking that level yet, could it mean that people are buying put options to ensure against this as a false breakout on the equities?
Um, if anything, I think they're buying calls right now.
Cash open is not open, lads, as of, by the way.
Yeah, we're about to get the oil open here.
A question, Tim.
Yeah.
So when the VIX fell to break the 31.8 level, so you said, you know, he was retracing to it, he broke to it, and he fell to close above, and you said, I'm going to be long there. You didn't wait for the full confirmation of it. Is it because of instinct or experience? Because
Yeah, because I'm a momentum trader. If I see momentum, I jump on the train. I don't wait for it to stop and ask for my ticket.
it could have just fell to so he would have maybe retraced to 31.65, but if he would have just suddenly just go back to 32, for example.
32.
Yes.
Yeah, I take my stop.
Yeah, you take your stop. Okay. It's more now about
that's not a decision for me. I mean, in a scenario like this, I would use a stop. Yeah, for sure, because I'm kind of imbalanced long or imbalanced pullback long. I need to be told where I'm wrong. I need to be told where I'm wrong there, because the market's kind of getting going, and I've missed it. Like I've missed this trade. The original breakdown actually for me is at this point. See, I'm looking at the VIX here. See this?
yeah.
When it comes down and this opens below here, that's the trade. That's the trade for me. So it's like this is 2000 tick fall. The kind of trade here is I need to do this 5 minutes. Here's the trade here. The doji on the VIX, and then giving it up at this exact moment in time, and that's it there. See that? Tiny selling, tiny selling. Get on. And you know I talk about that all the time on the volume bars. If I see that tiny amount of selling, or that tiny amount of activity going against the momentum, I'm like, boom, I want that, because those people are like, they're taking profits, but there's people taking profits there, but they're chickening out, and I'm kind of getting on a greater push, right? So why am I getting on a greater push there? Maybe, you know what? Maybe this 26,432 is a CVAH, right? Maybe that's the case. And I see this tiny selling here. Well, you know what? If I see the VIX give up a key level like this, after slowly coming down, sitting here, and and then this indecision doji, and then it opens below, boom, I'm in. So I'd be on this buy here, anywhere on this candle, anywhere here. And that's why, that's how I can kind of be flexible with my entries on rotations and whatnot, because I've got the added strength of a VIX indicator in the terms of equities, and I've got the added strength of the dollar index in terms of euro dollar. I mean, I don't know if it'll surprise you that much to know that like people will be long short these things hedged all the time. Now look at this. I'd have a target in on this upper quadrant here. Definitely up here.
I've got a target or a limit order short?
No, I'd have a target. I think if it gets up there, I don't know if you're going to get a first touch limit order short. I actually don't want to be short there. I want to be short here.
Okay.
Because look, why do I want to be short up there? Let's come back to that.
It's the top of the trend, and it's been respected several times.
Here. Yeah. 1, 2, 3. No, let's do 1, 2, Yeah. All right. Let's do some Fibonacci's here. Let's remove that. I'm going to show you a fib extension tool. And these things are just as much magic as value is magic. Low, high. Now remember, I'm projecting an upside continuation. So I've done a low, high, low. The Dow, to my mind, I think will trade 31177 this year. I'll show you something else. Actually, you know what? Oh shit. Oh no, I cleaned this up. Look at this Amazon chart. I haven't looked at this in over a year. Look at where the projection is on the upside here. Look at this aggressive uptrend since 2017. It's now almost the high. This top wedge was known since May last year, this time last year, pretty much. And then look at the breakout pattern we have on that wedge. These are monthly bars. And then look where we traded over COVID. We just traded to the bottom of the all-time uptrend, right here. Just traded there. That would have been one of the best buys of your life. You're making $1,000 almost on Amazon right now from the bottom of the market. That's a big trade. So you know, this is how you can use monthly bars to really get into some big equity trades. I could blow your mind, and we can look at Exxon. Let's look at Exxon. If I zoom in on these 1980s lows, I had actually, oh right, that's a little self-sacrificing, or let's do this, let's tidy this up. The all-time low, I think I drew it from here to this low, which was 87. I want you to watch what happens here. There's the all-time trend low, the mother trend low, or the mother trend where it intersected and then came evolved here. That's going to be, this is why it's just some of the best value in 30 years on this stock. I mean, look at how that technically respected that level. You know, fantastic stuff. You can really put it in there with the 2002 low as your entry target, perhaps. And then, sure enough, that marked the low of April, and up we go. You know, like there's some really fantastic opportunities in the market when you really, you know, do what Sam does in terms of analysis on certain markets. Zoom out 2 40-minute bars and then work your way in if you're really unsure about the levels. But we know how to trade value as well. So, you know, but when you're looking at the VIX and whatnot, I think it's very hard to trade value on the VIX. So this is why I'm talking about these bigger monthly bars, because I want you to be able to switch back to technical analysis on time bars when you're looking at the VIX and the dollar index. Any questions?
what is the next big or best software if we cannot get on Think or Swim? Because I tried investing.com and for the VIX.
You can use TradeView, which is like an online thing.
Yeah.
That's cloud delivered, or you can use. You can actually. I mean, Peter's bought the VIX for a CR.
Yeah, I've just done it this morning. It's $13 a month. You get the VIX data. An additional 13.
And you can trade it.
Yeah.
People do trade the VIX. It's a thing.
I'm looking now, Tim. I mean, the DXY's going up, the euro's moving down. The VIX hasn't moved. It's stuck on that level.
No, dude, it has moved. I mean, it has moved. What do you mean it hasn't moved? It has moved. No,
It hasn't broken through that level again. That's what I'm saying.
So we can actually trade the options on them. Not your X, no. So it has moved. I mean, it has moved, dude. Like, you know, I'm looking at 5 minute and 15 minute on this thing. I mean, even on the 15 minute here, it's moved.
I mean, it hasn't really moved through that level. That's what I'm talking about.
It has moved through this again. The significant. See what I said? Like this low. Yeah. Look, we got Vincent eyeballing this prior low, smashed it, and that did give us that inflection up through here. But again, the major level, as I said, the major level to look out at is 32.26. Like in the dollar euro pair yesterday, I got stopped out because I was waiting for a much bigger move as the dollar gave it up on a supportive level. So now look, as I said, how are you going to trade this short in the VIX? Pete?
Yeah, well, I mean, this is the thing. In my mind, the conflict is, are people believing this rally up in the equities?
You're telling,
and confirmation that they were.
Listen, Pete.
Would be them buying call options, which would drive the VIX down.
We're not in the business of trying to predict what anyone else is doing. We're in the business of doing what is happening. What is happening in the VIX? Are people buying more or less equity insurance right now, Peter?
Well, I would say they've stopped buying insurance to buy. They've stopped buying the call options. That's my point. Are they about to buy puts, which would reverse the VIX? That's my point.
You're going to go broke anticipating what people are about to do.
You're speaking Chinese.
What?
You're just speaking Chinese to me.
What people are about to do is irrelevant. I mean, I'm about to run a 3 minute, 5 kilometer. It's not going to happen.
Okay, well, in that case, they're doing nothing right now because it's not moving. That's the point. It's stuck.
What's the context?
Well, the context is...
This is the context. Here's the context. People were buying more equity insurance for their long portfolios. They're buying more insurance against equities going down here. And now they're selling it back. They don't want the insurance, as much insurance. They're selling it, they're getting rid of that insurance. And now we've retraced 60, look at it like this, 61.8% of insurance buyers are now gone.
Yeah.
Okay, well, what does that tell you about the insurable risk?
Well, insurance is a double-edged sword, isn't it? You're insuring against something going up, you're insuring against something going down.
Stop. What, just what's happening here? What's happening in this market?
Well, whilst the VIX is going down, that means that people are buying call options.
No, they're buying equities.
They're buying equities, yeah.
No, they're buying equities, but they're buying call options,
Yeah.
which is driving the VIX, right? So
Yeah, buying call options is also the same as being long.
yeah,
You're long the market. Yeah. So what's happened here is that the shorts in the market have now dissipated. So let's not think about let's not talk in terms of what we think will happen. Let's talk in terms of what is happening. So essentially we've had a breakdown here from the bid. It's tapered off. And yeah, we're just giving it up here. So I am waiting to see if this level will ultimately remain resistant on the day. And actually I'm going to be quite happy to wait for this.
that's it. Because we don't know yet if that's an imbalanced pullback, it's going to continue down. In which case, there's confidence that the market will continue to go up.
For me, I actually see that this is probably a sort of a term of a value high here. So to me, this is kind of like a RPB short off of that level. Is it going to hold? Well, let's look at the rhythm. I mean, it's kind of extended here. It's probably due a pullback to somewhere around here. Here, and then go off. We haven't even had the open. I mean, the open's in 8 minutes, so, or sorry, 18 minutes. So, I'm quite happy that this shake out. Like, I mean, that dollar trade came in. That dollar trade came in quite late in the day. Yeah, around like here, 5:30. And look at this dollar just scrambling back up to the scene of the crime. Probably could get a very nice re-entry on this. I don't think the dollar is going to bump over 93.38, but actually something's going on. Has anyone got their squawk on?
No.
You know what happened? The data came out, retail sales, and it was really good.
Okay.
At 1:30.
Okay.
That's when the strong bid happened.
Okay, yeah. So that's getting priced in to being dollar positive here. Dollar positive. That's going to kill the VIX too. So we're just making a retracement on that, and then I expect us to go down, especially on strong retails. I mean, let's see, what if we... Oh yeah, forecast 8, actual 17.7. Month on month, that's the month on month percentage, and core retail was forecast 5, actual 12.4. So yeah, really good. Wow, this is yeah, okay. Yeah, so COVID be damned. That's what this says to me. So
Still don't quite see why would that indicate dollar strength?
The dollar strength, I don't know, it's hard to know, but it's certainly positive for the economy. So therefore there's a mixture of people buying dollar at a risk, but now they're buying dollar because of it being a stronger economy.
Yeah.
You know, and the European economy is quite weak. But again, you know, that's a good question. Like, well, hold on a second. Like, why are they buying dollar when dollar should be getting weak over this weaker risk picture? You know, so let's like come back. Like, again, the scene of the crime yesterday. You know what? I'm thinking to myself, I really like another short from wherever the euro might be once we get up here on the dollar. Now we're getting into this congestion zone that it broke down from. I would really like to see the dollar push to the 938 and then get long in the euro. And sure enough, it is at the scene of the crime. See, here's where my entries were yesterday. Is that 8? Or sorry, is that 8? 5? Yeah, here 5. Yeah, here and here. Sorry, the best entry was here. My entry was here. Well,
So
where are we now in the dollar? Where are we now in the dollar? Okay, we're at the same fucking place. Well, do you think this dollar is overextended on that move up? Yeah, I do. So now, I like the short or the longs, the shorts the dollars and long the euros here. You get Texas hedged, buy the or sell the index, buy the euro. Get double the value, double the bang for your buck. I think that whole positive retail is priced in right now.
Tim,
Yeah.
on the euro, we are at the bottom of value area as well. I want to
Buy it. Buy it. Have you got good rhythm, good confirmation, everything? I'd be buying that shit. I mean, oh, I've got a euro. My euro charts have actually closed here. Is it? Oh no, where is it? Oh, yeah, there it is.
Because all the higher time frame are in balance up, and on the day we are
Oh yeah.
IB down, and we're just at the bottom of the value area. And -2 as well.
It's the quarterly or the weekly prior value area low. It's
Yeah.
just above, and you got the quarterly prior value area here. Yeah, I like the longs here. I like the longs here. Really do. What do I like? What do I like? I think the rhythm is a little bit shitty. I think it's gonna try something there. It's not ready. Flat. Gonna buy the QPVAH here. It's a great level on the euro, 127.80 actually. It's a really good level from yesterday. I like that one. 128.90, 128.90. Oh yeah, 128.90 is just below a bit of a trend, the current low of day, I think. So yeah, that's the end of this lecture. I hope it was useful. Look at the, okay, so here we go. Let's look again. All right, the VIX. Here we are. Now, I think the rhythm on Dow probably no. It's when we get close to these really big areas of support and resistance, like really big, significant, you do get a lot of messing around going on. Like you don't get clean rhythm. You know, look at this rhythm, like up, pull back, up, consolidation, up, pull back, up, imbalance pull back, up, imbalance pull back, up, consolidate, and then push through the level, imbalance pull back, imbalance pull back, up. I reckon we should get a push now up to this level. Given that, look at the VIX, look at the VIX, look at this. Shit. Alright, give me the goddamn. What am I doing? You know, look at that. But remember, be like Phil. Trade 12% of your hands. But once you start mapping the market like this, the later we get into the session, the more you're going to know what the fuck is going on. Yeah. So, any more questions? No? Yes, no, maybe? A lot of
No,
silence.
we're good.
Cool. Is that useful to anyone?
Yeah, it's very useful. Yeah, I think it's yet another thing to be looking at. And, I've got it up my chart book now, so
Cool. I think for me, there's really just no matter what the amount of noise in the marketplace, like the dollar index drives so much shit, so much stuff, and the VIX drives so much stuff, so much stuff. So it's quite remiss to not have them on your screen. I have my VIX and my dollar on my trading screen at all times, no matter what the market is I'm trading. And I've gone through the context of you don't really need to do this once. You know, you go out to your macro view and you kind of get an idea of what's going on and draw your major support and resistances, you know, and then you get a feel for what's kind of going on, and then you can really zoom in. Then you can kind of be like zooming in on your day bars, you know. See the big retracement after COVID down to the scene of the crime, bid up, you know, come back to the scene of the crime. Like I can use my multi-years to kind of see these multi-years, these kind of zones come from, as I've said before, these major tops and major bottoms. So see like this. So I can really get a good idea of what's going on in the marketplace. Yeah, so listen, best of luck with this, and remember, only take the good trades.
so Tim, just to wrap up, I mean, it's you still have to be very careful. Is the tail wagging the dog wagging the tail? What's moving what? I mean, that's probably the most fundamental thing, right?
Yeah, well, you'll find that the news drives the VIX. So the VIX will therefore then drive equity markets. So it's important to not overcomplicate this either, you know. Like what's the dollar doing? Whatever the dollar, okay, is the dollar going to get really weak at a level, XYZ level? I'm going to wait to see if it does. Okay, yes it is. Okay, I want to look at the euro. Can I get long somewhere here? Has it got rhythm? Is it are we imbalanced up? Are we at the high of value and holding? You know, while I'm looking for the dollar to get weak. Okay, so let's try and, you know, time this trade. You know, similar with the VIX. Yeah.
But to see the Dixie moving up with equities like that, it's fairly unusual as far as over the last few weeks.
Well, not on a
Concerned.
data event like that. Not on a data event.
Yeah.
Who's taking off?
Huh?
Who's taking off?
Who's taking off?
There's my flying saucer just warming it up.
Okay, guys, I'm going to let you go. My investment note for the day is buy plastics companies, Perspex, all of that stuff.
Right.
Well, because it's making screen for COVID-19 shops.
Yeah.
Get in.
All right, I'll let you
Great.
go.
Thanks a lot, Tim.
Girls.
Thanks, Tim. Bye.
I know.